Hello everyone, we are from the Samsami FX channel. Why Bitcoin reacts to wars, inflation, and oil prices. Imagine waking up tomorrow. Bitcoin is down 15%. No exchange hack. No government ban, just one headline: a new war has started. But here's the strange part. A few weeks later, Bitcoin suddenly starts rising again. Why? Isn't Bitcoin supposed to be a safe haven like gold? Or is something much bigger happening behind the scenes? Stay until the end, because once you understand this, you'll never look at Bitcoin the same way again. Markets hate uncertainty. The biggest enemy of financial markets isn't war. It isn't inflation. It isn't even recession. It's uncertainty. When investors don't know what will happen next, they panic. Money quickly flows into assets that feel safer, like cash, government bonds, or gold. Because Bitcoin is still considered a risky asset, it's often sold during the first stage of a crisis. But here's what most beginners don't understand. The first market reaction is often emotional, not logical. That's why prices sometimes recover much faster than people expect. The recovery nobody expects. After the panic ends, professional investors begin asking a completely different question. What will central banks do now? If governments start printing more money? If interest rates eventually fall? If liquidity returns? Everything changes. Bitcoin suddenly becomes attractive again. Why? Because investors start thinking months ahead instead of reacting to today's headlines. And this leads us to one of the biggest drivers of Bitcoin. Inflation. Inflation changes everything. Inflation slowly reduces the value of your money. Every year, your cash buys a little less. This is why many investors search for assets with limited supply. Bitcoin has only 21 million coins. That's one reason people compare it to digital gold. But here's where many people make a huge mistake. They assume high inflation automatically means Bitcoin will rise. That's simply not true. Because another factor can completely change the picture. Interest rates. The hidden force behind Bitcoin. Most beginners watch Bitcoin charts. Professional traders watch central banks. When interest rates increase, borrowing becomes expensive. Less money flows into investments. Liquidity disappears. And risky assets usually suffer. This is exactly why Bitcoin often struggles during aggressive rate hikes. But here's something most people never notice. Bitcoin usually starts moving before central banks officially change direction. Markets always try to price in the future, not the present. What oil has to do with Bitcoin? At first, oil and Bitcoin seem completely unrelated. One powers the global economy. The other is a digital currency. So why should Bitcoin traders care about oil? Because expensive oil increases transportation and production costs. That pushes inflation higher. Higher inflation often keeps interest rates elevated. And higher interest rates usually reduce liquidity. Suddenly, oil affects Bitcoin without ever directly touching it. Everything is connected. The secret most traders ignore. Here's something that surprises almost everyone. Markets don't move because of news. Markets move because expectations change. Sometimes terrible news sends prices higher. Sometimes positive news sends prices lower. Why? Because traders aren't reacting to today's headline. They're reacting to tomorrow's possibilities. This is why understanding market psychology is far more valuable than memorizing news events. What smart traders actually watch. Instead of chasing every headline, Professional traders build a checklist. Inflation, interest rates, central bank decisions, oil prices, liquidity, geopolitical risks. But above all, they watch how price reacts. Because price tells the truth. Opinions don't. News doesn't. Social media definitely doesn't. Price does. Conclusion. Bitcoin doesn't move because of one single event. It moves because thousands of investors continuously change their expectations. Fear, greed, liquidity, inflation, interest rates, global events. Everything works together. And the traders who understand these relationships don't try to predict the future. They prepare for every possible scenario. Because in trading, preparation always beats prediction. If you enjoyed this video, subscribe for more trading psychology, market education, and Bitcoin insights.